Who controls all our money? This has to be the simple and yet the most complex question to exist. One thing is certain though, you don't control the money. I don't control the money. Then who does? Everything we have ever done, every decision we have ever made, every move we ever made, and every risk we ever took was so we could make money. But then, who controls the money? Money rules the world. Money makes the world click. Money makes the world go round. Money influences our lifestyle. Money influences our choices. Money rules the world. But then, who controls the money? Where does money come from? Who releases it? Who creates it? Who owns it? Why does it hold so much power? Why do we spend and most times waste the better part of our lives chasing money? Why does the greatness of our entire existence rely heavily on making money? In this unique video, we'll have no stone unturned in our attempt to answer some of the most thought-provoking yet unanswerable questions regarding the financial system on which the world operates. After 50 years of war, the English government had exhausted all the money at their disposal, which means they needed loans to keep the country and the government afloat. A solution was propounded by a Scottish banker named William Paterson, who decided that a private bank who no footprint whatsoever would loan the money to the English government. This is the origin of the central banking system that is prevalent in our world today. In the early 20th century, a group of bankers made another attempt to put the central banking system in the United States of America. This was the third time of asking after two previous attempts had failed. These bankers were hell-bent on the four of the project, arranged for a secret meeting in an island on the coast of Georgia. These bankers were hell-bent on establishing the central banking system in the USA. Senator Nelson Aldrich, who was at the fore of the project, arranged for a secret meeting in an island on the coast of Georgia, an order for a train car to transport himself and 6 other participants from New York to the venue. One important instruction was that they were not to be spotted by journalists and news reporters, so questions would not be asked. After 9 days of careful brainstorming, the Federal Reserve System was created. All this information are made available to the public. Now, Nelson was a prominent and influential politician. He was one of the big 4 key Republicans who largely controlled the major decisions of the Senate. He was regarded as the general manager of the nation by the press because of how impactful he was on national politics and the position he held on the Senate Finance Committee. So he was able to bring together some of the richest people on earth at the same time as part of his 6-man group. This man informed the public that the purpose of the Federal Reserve System was to destroy the grip the world trade banks had on the United States and stabilize their economy. What they didn't say was they wanted to replace the system and not destroy. If they succeeded, it meant that they could create money as they wished and loan the American government with interests. Pretty smart, right? Now the American people didn't want a central bank. They knew what it was about and fought vehemently against it. Central banks have a history of bringing wealth, inequality, and instability. Each time was an economic bust. Those who were already rich got even richer, while those who were poor got poorer. The bill was initially named the Aldrich Bill, but when it was heard at the Congress were not having it. So Nelson and his team of 6 went back to rename the bill to what it is known as today. They also sent 2 millionaires on the team to Congress with the bill to ensure there would be no suspicions. Then the team used reverse psychology to fool the American public. What there was protest against the bill and urged it to be thrown out of the Congress, stating that the bill will ruin the banks. The Fox protest against the bill led the American people to believe the Federal Reserve Act was a good idea since the bankers hated it. After all bankers did was look for ways to enrich themselves at the expense of the poor. Why not level the playing field and make the bankers poor? The tactic worked like magic and they gained the support of the American people. Next, they proceeded to deceive the Congress by putting certain clauses in the bill that restricted how powerful they would be, only to remove those clauses immediately the bill was passed. All it took was successfully fooling the people and the lawmakers. On December 23, 1913, the bill was passed. And that meant the issuing and creation of American money was now in the hands of a group of men. Today, the Federal Reserve is the most powerful system in the United States of America. No agency of government can question or control the actions of the Federal Reserve. The Federal Reserve cannot even be investigated. Now, how does this affect you and me? It's simple. First, the central banking system has been established in nearly all the countries of the world, with Iran, North Korea, and Cuba being the only exceptions. Secondly, the US dollar has been the reserve currency of the world since World War II. This means every currency in the world is supported by the US dollar. This means your country is linked directly to the Federal Reserve and its policies in America. After the Second World War, the US dollar was backed by gold. The effect of this was currencies were very stable and exchange rates were fixed, and you could calculate your profits before you even started a business. In 1971, the US dollar was taken off the good standard. Since then, the dollar has been backed by nothing. Now, we earlier established that every currency in the world is backed by the dollar. So how come the dollar is backed by nothing? What this means is that your currency is not backed by anything tangible. Now, how does this affect your currency? Every time the Federal Reserve creates money, your currency reduces in value because it is backed by US dollar, which means your currency is worth less anytime the Federal Reserve creates money. To free themselves from the shackles of the Federal Reserve, countries like Russia and China have been selling their US reserves and have bought gold in the same period of time. So how do we pay for things? How do we give money out and receive goods and services if the currency I'm using is backed by nothing? This is why the theory that the economic system of the world is run by faith. For the purpose of this documentary and the fact that faith is mostly associated with religion, I will use the word trust. For example, you're willing to exchange your hard labor or your valuable property for a small stack of little printed papers or just a change of number in an account. You have to be pretty trusting to do that. But there has to be a backing for trust. You don't trust a person you don't know. That's stupid. So what informs this trust? Well, that trust is backed by the fact that majority of people have no idea or the slightest clue where money comes from. We'll address that in the video. The central bank is a national bank that provides financial and banking services for its country's government and commercial banking system, as well as implementing the government's monetary policy and issuing currency. Investopedia explains it as a financial institution given privileged control over the production and distribution of money and credit for a nation or a group of nations. In modern economies, the central bank is usually responsible for the formulation of monetary policy and the regulation of member banks. The central bank of any nation can loan money to the nation's government with interests. Here's how it works. When the government needs more money than it has received from the revenue generated, it goes to the treasury for money. The treasury then becomes a bond from the government. Bonds are fixed income instrument that represents a loan made by an investor to a borrower, typically corporate or governmental. A bond could be thought of as an IOU between the lender and borrower that includes the details of the loan and its payments. Bonds are used by companies, municipalities, states, and sovereign governments to finance projects and operations. Owners of bonds are debt holders or creditors of the issuer. The treasury gives this bond to the central bank. The central bank then hands a check to the banks. The check exchange money is created and government bills are sorted. I know the question in your mind now is, where does the central bank get the funds to be able to write this check? Well, they invent it. Yes, they simply invent the money. When the central bank hands you a check, they're handing you money from an account with no money. The money the central bank creates can be used to buy goods and services and uses that route to enter into the economy. Now, if you did that, you're going to jail. They do that without consequences because they created the system. And that system is what the world operates on today. Well, that's just one way to create money. Here's another one. Anytime you go to a commercial bank to request a loan, the bank creates money from nowhere to give you this loan with interests. Are you surprised? I know all your life you believe when you requested a loan, the banks took money from other people's deposits and gave it to you. Well, that's what they want you to believe. Every time you request a loan, new money is created. The shocking part, 97% of money is created using this format. The remaining 3% are the physical cash we carry around. All these are the results of the Federal Reserve Act created in 1913. So what are the consequences? How does this affect me and you? As the bank continues to give loans, new money is created. This means the money already in circulation becomes even more worthless. This is called inflation. Investopedia defines inflation as an economic-wide sustained trend of increasing prices from one year to the next. The rate of inflation represents the rate at which the real value of an investment is eroded and the loss in spending or purchasing power over time. Inflation is the reason why the price of a car went from $2,000 to what it is today. The prices of things will continue to increase as long as the system is in place. So, who controls money? Well, the central bank does. They do this by influencing interest rates, printing money, and setting bank reserve requirements. Central banks create financial instability at will and derail the economy when they like. Let me give you a great example. Rudolf von Havenstein, president of the German Reichsbank, shortly before the First World War started, ordinary Germans were encouraged to give up their stories of gold coins and jewelry in exchange for paper money issued by Reichsbank, which gave the government greater ability to finance the war effort through the central bank. That this mass issuance of paper money was steadily driving down the value of the mark was held back from them by censorship, even as it was obvious to anyone going to the market to buy groceries. A few years later, German hyperinflation wiped out the savings of an entire generation of what have been an increasingly prosperous merchant class today. Today's central banks around the world are encouraging the public to hold its savings in bonds, stocks, and commodities rather than in bank cash. So what does this mean? It means central banks control the economy while central banks and commercial banks control the money. The difference is that central banks create money when they like, while the commercial banks needs you to take loans so they can create money. The central banks are the cause of some of the worst recession and economic meltdowns in the world. It's why the American people fought against it until they were outsmarted by Aldrich and his group of six. But are central banks a bad thing? Well, that's not a bad argument. So agree that the concept of central banking is flawed, but a couple of tweaks to the system can change it for better. One of these tweaks is that the government should take control over the central bank's issue and control its own currency and make economic decisions that would benefit the people. This argument seems fair. I mean, the central bank would be in safer hands when controlled by the government, and not some greedy individuals looking to make a profit and are not bothered by the effect of their actions. If you followed this video till this point, then I'm sure you've learned something new. Smash a like on this video and share with your friends so they can learn. If you have been intrigued by this video, then there's more where it came from. Subscribe to the channel to find other expository videos like this one, and you'll be amazed at the things you didn't know. See you on the next video. Cheers.